Hey everyone, Jody Gray here with Zach and Jody Photography, bringing to you week 3 of business finances, managing your money. This week we're going to talk about the second part of managing your money with an irregular income, which a lot of us do, especially as photographers. We're going to talk about the steps that Zach and I take to actually pay ourselves at the end of the month. In the first video, we talked about a little bit our story, Zach and my story of where we came from. And then we talked about budgeting, which getting on a budget is the foundation to having your finances set up in a really strong way. The second week we talked about keeping track of our irregular income, knowing when the money was coming in. And now we're going to talk about, all right, how do we pay ourselves, which is the reason why we make money to begin with, right? So this is how we do it. At the end of each month, we work on our finances. And just kind of a quick overview, I do our finances. But then at the end, I'm always making sure to touch base with Zach to make sure that we're on the same page. I'm more of the nerd and I geek out and I really love getting into that stuff and taking care of it. But at the end of the day, Zach and I need to be on the same page with that. So the first step is we have an ongoing list of expenses that we keep track of for our business. So for example, a client pays us for a gallery wrap. We haven't ordered that yet, and we need to make sure that we hold that money to place the order for the gallery wrap, or maybe an album order has come in, or maybe sales tax you've been paid. The last thing that we want to do is spend that money, and then we don't have any money left when it's time to actually place the order. The same thing goes with I think I already said sales tax, but gear, like anticipating expenses where you need to get gear fixed or you're saving up for gear. So make sure to have, we make sure to have a total running of how much money we need to save and keep in that account. And then we also like to have a cushion. For the longest time we had about a $1,000 cushion in that account. I think we did $1,400 at one point just because now it's a little bit more just because it makes me feel better and I like to keep that cushion in there. So at that point, once you have that total of what you need to keep in your business account, then you know how much extra you have left to take out. So at that point, you can pay yourself. So how we keep our money organized once we take that money out is we actually have a few different checking accounts, 4 to be exact. And the reason we have this is because the last thing we want to do is we don't want to find ourselves screwed when it comes to paying taxes that, oh, we owe X amount maybe when we're making our quarterly payments or the payments at the end of the year and we don't have that money. Or we go to church to tithe and then we write the check and then that was kept in our main checking account and we didn't realize it and we spent that money by mistake. So the last thing we want to do is find ourselves screwed in that way, so it's easier for me to go ahead and just create separate checking accounts. So we have 4 main accounts. The first one is our monthly expenses. So this is the account that we pay all of our bills out of, and this is the account that we take the cash out, our monthly spending budget cash that we had talked about in video 1. And then the second account that we have is tithe. And I just want to stop here for a moment. And we have found as believers, when we have honored God with our first fruits, that He has continued to bless us. And we tithe when we made like $24,000 a year, and we continue to tithe today. And I love what one of our commenters on our blog, Jason, said is he has found with his family, and we found it to be true as well, that the more we give back, the more we receive. So the Lord definitely blesses that. So for all of you believers out there, little note of goodness. So, all right, we have our monthly expenses checking account, we have our tithe account, and we have a taxes account. And then the last account we have is our emergency fund / saving account. So we're going to have a little case study of the Jones family. And the Jones family owns their own photography business, and at the end of the month, they've done all the numbers and they have an extra 10 grand to take out of their business account. So they do an owner's draw, they take out 10 grand, and they automatically transfer it into their monthly expenses account. So immediately they take out 10%, which is tithe, $1,000, and transfer that into the checking account, or to the tithe account. And then they take $2,500, which is 25% for taxes, and they transfer that into the taxes account. Their tax bracket puts them at 25%, so that's the money that they're holding for their estimated tax payments. And then that leaves them with $6,500 after they've paid their tithe, after they've paid their taxes. So now the money is good to start spending. So because they did their budget, and in video 1 that we talked about, they know they need $4,000 a month to live. This covers all of their bills, cash spending, all of that goodness. So now what they do is they transfer out anything extra to their emergency savings account. So that's $1,500 that they have that's extra. So if it's helped, maybe write this down so you're tracking with me. I hope I'm not going too fast. So now the Jones family has $4,000 in their monthly expenses account. So now all of the bills that they have will be paid out of that. And again, like I mentioned, their cash spending. So what's great is that account is zeroed out. So no one can spend over. So if any family member spends over the budget, that account is going to go into the negative. So that helps keeping the spending at the level that everyone's agreed upon, because you know that it's going to go over if people overspend. For the longest time, I kept a cushion in there because I liked it, and so I kept about $700 as a cushion. So, and you know, if we were the Jones family, I would have kept $4,700 in that account. And I found that we would spend that $700 every month just because we knew that there was the cushion in there. So, super important to zero out that account. Okay, so now they have $1,500 extra that they've transferred into the savings emergency fund. So now we like to defer to Dave Ramsey's financial plans for what to do with that money. And he has 7 baby steps to financial freedom. Step number 1 is have a $1,000 emergency fund, and this is for emergencies only. Step number 2 is pay off all of your debt, excluding the house, so everything but the house. Step number 3 is complete your emergency fund, so have 3 to 6 months of living expenses in this account. And step 3B, for those of you who aren't in a house yet, to go ahead and start saving for a house. Then step number 4 is take 15% of your income and put that into Roth IRAs or other pre-tax savings accounts. Step number 5 is start college funds for your kids. Step number 6 is to pay off your house. And the last and final step is to go ahead and build wealth and give. Dave Ramsey says there's only 3 things for you to do with your money: give, save, and spend, and that's it. So those are the 7 baby steps, and next week we will go into a bit further of how we have organized our finances to plan and prepare for the future. And we also realize that there are some of you who may at the end of each month not have anything extra, and there are hard times out there, and we realize that there are people in those situations. And we want to just encourage you that the money that you do have coming in, be as faithful as you can with that, and get on a written budget. And we want to refer you once more to Dave Ramsey's book, A Total Money Makeover. And he talks about listing your family needs and priorities. So starting off with food, clothing, shelter. That gets your money first. And then from there on out, list everything else. And then however much money you have, it just flows to those things. And when you don't have any more left, the bottom don't get paid. And sometimes that's debt, and that's collectors, and that's really hard. And we're in no means financial counselors, but we really recommend and suggest getting with a financial counselor to help you walk through those times. And of course, the best resource ever is, we highly recommend Dave Ramsey's Total Money Makeover and getting in one of his Financial Peace course universities, which has changed our lives dramatically. So we thank you all for tuning in this week, and we will see you next week when we go into more detail with how we manage our extra finances that we have when it comes to saving and giving. Thanks, and we'll see you next week.